So let's talk about data in insurance. So insurance has had more data than almost any industry on earth for longer than almost any industry on earth. How would you say the industry has been at using that data?
uh, Mixed, mixed results. So I think there are a few different things, right? You're right. Insurance typically had a lot of data and it didn't necessarily help them. And it was a bit like, I think we talked about this when we were having the prep call. It's like Cheesecake Factory has a very big menu and then you can't decide what you want to eat, right? So I think one of the challenges is there are tons of data, but what to do with it and what's the data that actually matters. We all know from our own experience, if you buy a life insurance policy or something, they ask you loads and loads of questions. When I did it, like a nurse had to come to my house and all this kind of stuff. But the reality is there are like 5 or 6 questions that are actually the ones that matter, right? So one of the challenges is, okay, what's the data that really matters, and kind of what do we do with it? And unfortunately, it's a bit like exclusions in insurance policies, right? It's easy to add them, it's difficult to take them away. So it's very difficult psychologically for companies who were asking people for 10 pages of information to say, okay, we're going to underwrite off 6 things. And that, to go back to the earlier question, is where some MGAs are good, because they're like, our raison d'etre is we're going to underwrite from these 6 things, right? And so that's one problem. The other problem, which we've referred to earlier, is you can have tons of data, but it might not be relevant anymore. So let's take something we all understand, because I don't know about where you are today, but where I live, it's pretty hot outside. It's 100 degrees Fahrenheit. So insurance, one of the areas where they have tons of data, literally going back hundreds of years, is weather data, right? And natural catastrophes, which is awesome. Although it is debatable whether, data from 100 years ago or 50 years ago or even 10 or 20 years ago is actually that relevant anymore. So it can also be like a false sense of security, right? Because you have all this data and you can put it in the model and it can spit something out. But is all this data from ages ago really relevant? Then the kind of art comes in on, how to make it more predictive, like what you need to tweak. It's almost like when you're building an AI model, right? And if you have an open source and you're changing the weights. So that's where kind of human judgment and experience and the diversified portfolio really needs to come in, because I'm actually quite concerned in certain areas that are very NatCat and weather exposed, that insurers, but also banks who are making lending decisions, are basing them off data that isn't relevant anymore.
So, so let's talk more about you said that the record's mixed. So why are they good when they're good, and let's say when they're not so good at it? What's the difference?
Well, okay, so I think you have to be able to see the wood for the trees, right? What's important. Then there's the question of what state is the data in, because financial services companies in general, not only insurers, definitely banks as well, they have a lot of data, but typically it was kind of all over the place, right? It was in different formats. It was different types of files, like handwriting, in different silos, in different departments. They didn't necessarily know. So one of the good things about AI is that you can take unstructured data. I mean, I have really, really bad handwriting. And as an experiment the other day, I loaded some handwritten notes on paper, not even on an iPad, into a large language model and said, like, sorry about the writing, but like pull out the main points from these notes. And it did a pretty good job. And it also queried things it couldn't read, which was quite interesting, because honestly, I could hardly read it. And I wrote it. So that's an area that I think AI can definitely help with. And then so I think where they're good, or where they're good now, is if they are sorting out what data they have, who has it, and getting it kind of into a decent format and kind of consolidated. One of the other problems, which you will know very well, is kind of the data stays in silos, right? So this sounds totally obvious, but there are all sorts of examples in the insurance industry of where the claims folks were not talking to the underwriting folks. So they're seeing all these claims, but they're not telling people like, hey, like look out for this when you're underwriting. I was actually talking to somebody from a company earlier on this year who, and I was talking to the CISO, to the Chief Information Security Officer, and this company underwrites cyber as well. And I said, are you talking to the underwriting folks and the claims folks who are doing cyber? And they're like, oh no, that's like a really great idea. Which it was, though I say it myself. So that's one of the other problems. Where to be good, you need to have a continuous loop, right? Between, who are making the decisions. And it may even start with like who you're marketing to, what kind of risks are you getting into the funnel, then underwriting and pricing and claims. And it needs to work like that. So when that's happening, then companies are doing much better. And usually I would say have a bit of a competitive advantage because they can react more quickly. And it's based on real data, not just, someone's hypothesis.
So we talked about data and what they actually need versus what they don't. What kind of data does an underwriter actually need that they don't have?
Um, so look, this ties in with being a board member as well, right? Because there's a risk when you're a board member, you have to approve the quarterly results and all this kind of thing,
Mm-hmm.
that you're always looking backwards. You get something presented to you, like this is what happened last quarter or last month or whatever, like fine. But what about what's going to happen, right? So I think one of the big challenges is to, and it's different for each line of business, but to try to know like what is predictive. I always think it's funny, and again, let's take an example that everyone can relate to because we've probably all done this. But if you had telematics or your personal motor, because I was not, and I did it because it's an interesting experiment and you get a discount. So what's not to like? And I'm a decent driver, but I wasn't entirely convinced that the things they were monitoring were actually the ones that were really kind of the deciding factor, right? I think it was almost more of a screen. If you're prepared to accept the telematics, you're probably a decent driver. And I've seen articles that suggest that things like, for example, I don't know, that, well, so they hate hard braking, right? If you do hard braking, that's bad. Okay. But if a kid runs out in the road, you probably better want to be doing hard braking and not hit them for social reasons as well as your insurance policy, right? And there are things. I mean, I think it's what time of day you drive at, for example, is more likely to be a good indicator of whether you're going to have an accident than if you do a little bit of speeding or hard braking. So I think that's a challenge to know kind of like what are the more predictive data points rather than just gathering data on what happened.